Hi, this is Jin Rong, Market Strategist for IG Singapore. After Wall Street kickstarted 2024 on the back foot, this week has broadly marked a week of recovery for major US indices where we saw renewed inflows back into big tech stocks. On the macro front, both the US December headline and core CPI data surprised slightly on the upside, but markets were just not buying into the stance that the Fed will delay rate cuts. Expectations for a 25 basis point cut in March this year remains the broad market consensus, with attention now turning to the upcoming US earnings season to validate views that corporate earnings have bottomed and are set on a further recovery path ahead. As we head into the new week, here are 4 things on our radar. First up, the coming week will bring earning releases from Morgan Stanley, Goldman Sachs, and Charles Schwab. It may seem like a relatively quiet week for earnings before the busy schedule for big tech comes up in the following week. Next up, we have a series of China's economic data out on Wednesday. Declining prices in December continue to reflect weak domestic demand in the world's second largest economy, as soft labor conditions and the property market slump continue to keep consumer confidence at bay. The current trend of weak economic data suggests that the accommodative policy environment has yet to translate to a sustained turnaround in economic conditions. Ahead, broad expectations are for China's growth headwinds to persist in 2024. Any downside surprises in the upcoming data may reinforce the trend of weak growth conditions, which will amplify calls for more to be done by authorities over the coming months. Next, we have UK inflation rate out on Wednesday as well. The larger than expected falls in recent inflation provide some validation that the Bank of England's aggressive rate hiking cycle is bringing inflation under control. It is now fostering market expectations of 6 25 basis point rate cuts in 2024. The upcoming inflation rate will be on watch, with the absence of any upside inflation surprise in focus to support such dovish pricing. Lastly, we have Japan's inflation rate out on Friday. Downside surprises in Japan's November household spending and wage growth suggest that the Bank of Japan still has room to exercise more patience in its policy normalization process, which drove the weakening of the Japanese yen last week. With that, the upcoming inflation data will play an important role in swaying market expectations around the timing of exit for Japan's negative interest rate policy. For now, evidence of sustained wage increases and stable inflation may still remain out of sight, which may prompt more wait and see from the central bank at the upcoming January meeting. That's all for now, and I will see you next week.